Hello everyone, welcome to Oliveboard, and in this video we are going to discuss about the revised directions on investments that are made by the regulated entities in the AIF. Okay, so this is going to be important for your examination, though this is a draft circular. Definitely the final circular will come soon. Okay, so let's have a discussion around these revised directions on investments made by the regulated entities in AIF. Before starting the video, if you are preparing for your RBI Grade B examination, you can check out our course and you can start your journey with us. You can download this particular PDF from our application and you can download the previous year questions as well, and you can start practicing these questions as well, right? So first thing, I'll be telling you about the basic meaning of these terminologies that are there in this particular draft circular. The first terminology is a regulated entity. What do you mean by regulated entity? It can be a bank, it can be any other financial institution which is regulated by RBI, That's why we call it as a regulated entity, because it's being regulated by RBI, right? Another terminology is alternate investment funds. Now these are not the traditional sources of funds, right? These are alternate source of funds. What is alternate source of funds? Just like a mutual fund company takes investment from so many investors and form a pooled fund, right? Form a pool of fund. Just like that, AIF is also doing the same. However, they are investing in a different kind of asset class, mostly non-traditional asset class. They don't invest directly in the shares and debentures of the listed companies. They are investing in unlisted startups. They are investing in real estate or even in the distressed asset as well. So they are taking the real risk. Okay, they are taking the real risk, and mostly HNIs, high net worth individuals and institutions participate, invest their money via AIF, alternate investment funds, right? Now if I talk about the minimum threshold, the minimum amount that you guys need in order to start your investment with the AIF is 1 crore rupees. Okay, so अगर आपको AIF के अंदर इन्वेस्ट करना है तो यहाँ पे 1 खोखे की रिक्वायरमेंट रहेगी. 1 crore is the minimum requirement. However, if you are a small investor, if you are a retail investor, you can start doing it via SIPs in mutual funds. So we know that we can invest in SIP nowadays as low as with 250 rupee per month. Why? Because the concept of choti SIP has also been launched by the SEBI, जो आपको permit करेगा to invest in mutual funds with only 250 rupees, right? There is a new asset class as well, SIF, specialized investment fund. The minimum criteria is 10 lakh rupee, portfolio management minimum 50 lakh, and AIF minimum 1 crore, right? So I have given you the notes of AIF as well. You can study from this as well, like what AIF is all about in detail. Definitely they are having high risk, and that's why they are giving high return as well. And that's the rule of finance. High risk, definitely the investor will demand higher return, right, for taking that risk. Now there are 3 categories of AIF. You can study this concept later on from the PDF by downloading this PDF from our application, right? Category 1 AIF, it encompasses of investment in startups and social impact sector. Category 2 AIF, it has private equity and debt fund, and category 3 AIF, hedge funds and high risk investments, right? So these are basically the 3 categories of AIF. Now the headline is RBI proposes relaxation of investment norms for regulated entities, banks and financial institutions in alternate investment funds. Sir, why there is a need of any kind of relaxation? Is there any problem in this particular investment? So we need to go into the background. We need to first understand the history, the background of it, and then you get to know the real problem, right? So they have relaxed norms like bank and financial institution can invest in AIF to a certain limit. They have introduced a new cap. But the question comes like, what is the need of this cap? Why do we need this cap, right? Banks and financial institutions should be ideally freely allowed to invest in the AIF, right? So look, let's first understand this thing with an example. I take example of HDFC Bank here. right? Let's suppose HDFC Bank, it's a regulated entity by an RBI. They have given loan to, let's suppose, a company Prateek Limited. So this is a company, they have given me the loan worth rupees 10 crore, right? 10 crore का लोन ले लिया मैंने HDFC बैंक से. Now HDFC Bank must have done the credit worthiness check and all the checks, have studied my financial statements and given me the loan of 10 crore rupee, right? Based on my credit assessment. Now what HDFC Bank is doing, they are investing heavily in an AIF, alternate investment fund. Let's suppose alternative investment fund में वो काफी सारा investment कर रहे हैं. They are investing a lot of money in the AIF, right? What if this AIF is again investing in my company, or maybe giving my company loans and advances? That's possible, right? Maybe this AIF is giving loans to Prateek Limited and earning good amount of interest on it. So don't you feel that you have invested in this AIF? So this particular is a direct lending, I can understand. This is a direct lending. However, don't you feel that you have indirectly invested again in Prateek Limited? You have offered loan again in Prateek Limited, right? So this is a big problem. The problem of over lending, or maybe it's a deliberate arrangement, right? I cannot take loan more than 10 crore directly from HDFC Bank, so I'm taking it via an AIF, alternate investment fund. That's why in December 2023, RBI imposed restrictions preventing this kind of things, preventing regulated entities from investing in AIF. So they cannot invest in AIF. That's a bad news, right? Everybody should have the right to invest their own money, right? Because they are having exposure to existing or recent borrowers. So I am the existing, or I can also call it myself a recent borrower. Basically, I am a borrower, or even you can call me a debtor. Who is a debtor? Because I have taken money from HDFC Bank. So for HDFC Bank, I am a debtor. In the books of accounts of HDFC Bank, I am a debtor, right? I am an asset for the HDFC Bank. So RBI has restricted such kind of arrangement that HDFC Bank or any regulated entity cannot invest in AIF if the AIF is again exposed to the existing borrower of HDFC Bank, right? So that's a great problem, I can say. That's a huge problem for the regulated entities, for the governments, right? So, but such kind of restriction, don't you feel, limits the bank to invest their money in AIF, right? So that's why they have aimed to move this thing to enhanced financial discipline and mitigate the risk associated with indirect lending. They have proposed a relaxation. Why not to introduce a particular cap so that banks and regulated entities can still invest their money in alternate investment fund, however up to a certain limit. एक लिमिट तक इन्वेस्ट कर लो, उससे ऊपर नहीं कर सकते, राइट? सो व्हाट इज द लिमिट? इफ यू आर एन इंडिविजुअल बैंक or a financial institution, your investment cap is 10% of the AIF corpus. Let's suppose the AIF is having a corpus of 100 crore. Then in that case, 10% of this corpus means 10 crore. So HDFC Bank can now invest only up to 10 crore in this particular AIF. That's a cap. That's a cap, right? And you cannot bypass it. You cannot bypass it. Okay, that's a cap. 10% is the cap if you are an individual RE, right? If you are an individual RE. However, aggregate RE investment cap. There is an aggregate RE investment cap as well. So all the REs want to invest in a single AIF. Then there is a group limit of 15% of AIF corpus. So let's suppose the AIF corpus is 100 crore. Then in case maximum 15 crore investment can be taken from all the REs, regulated entities, and that's the aggregate cap. There is an individual cap of 10%. There is an aggregate cap of again 15%, right? So now regulated entities can invest again in AIF. However, they are subject to a maximum cap of 10% if they are individual REs. However, the cap is 15% if they are all the REs are investing in the single AIF scheme, right? However, RBI has also prescribed certain exemptions for strategic AIF. So there are certain criteria. If you fulfill those criteria for strategic purpose, these caps will be exempt. That means those regulated entities will be able to invest more than the stated cap in the AIF. Why? Because they are formed for strategic purpose. The AIF are formed for strategic purpose, and that's an exemption from RBI's end. Okay. One more important thing, unrestricted investment threshold. Investment up to 5% of the AIF corpus by a regulated entities are allowed without any additional restrictions. What do you mean by this? Let's suppose a RE regulated entity has invested 5 crore in an AIF. The AIF corpus is of 100 crore. So I can say that they have invested only up to 5% of the AIF corpus. That will come under unrestricted investment threshold. There is no such a restriction on this amount, right? No conditions to be followed. You can easily invest up to 5% of the AIF corpus, right? If you are a regulated entity. However, there will be a provisioning requirement. You need to create a provision if you have exceeded that 5% limit. Let's suppose the arrangement was like this. The HDFC Bank has granted me loan, and the HDFC Bank has also invested in an AIF, which in turn is again giving loan to my company, right? So in that case, if the HDFC Bank exceeds 5% of the corpus investment, let's suppose the corpus is 100 crore, HDFC Bank has invested, let's suppose 8 crore, right? So I can say that this is exceeding 5 crore. Up to 5 crore there was no problem. However, this additional 3 crore will be a problem, and if there is a case of downstream debt exposure. What do you mean by downstream exposure? HDFC Bank has already given loan to Prateek Limited. However, via AIF, again there is an investment in Prateek Limited debt securities. So that's a kind of downstream debt exposure. AIF is having a downstream debt exposure to the same borrower to which already credit has been granted by the HDFC, right? And it exceeds 5%. So this is a problem, and this 3 crore rupee will be subject to 100% provisioning. That means HDFC Bank will need to make 100% of provision on this 3 crore rupee. Clearly, the RBI here is restricting bank to go more than 5% in these kind of transactions. In these kind of transactions, they are restricting the banks to limit their exposure up to 5%. That's an unrestricted exposure, right? So the whole objective here is to balance the need for the financial discipline with enough flexibility for the RBI. So in order to provide flexibility, they have removed the restriction and they have introduced a cap based limit. 10%, 15% and 5% is the unrestricted limit here, right? Anything above 5% will attract 100% provision on the proportionate exposure that we have already discussed. Okay, so here we can see the directions as well. These are the draft directions, revised directions for investment by RE in AIF. So on 19th of March they have released it, and the things that I have already told you all are stated here, apart from few things. The first thing is possible evergreening. So they want to stop this possible evergreening. What do you mean by evergreening? The HDFC Bank has given loan to Prateek Limited, right? Again they are giving loan to HDFC Bank via AIF. So what if HDFC Bank, let's take an example, HDFC Bank has given loan to me, right? What if I am not able to repay this loan? HDFC Bank don't want that Prateek Limited is turning as an NPA in its books of accounts, right? That because that creates a problem. So why not to give a loan, to give investment in AIF, and AIF is funding me. AIF is again giving me loan and I am repaying my earlier loan, which I was not able to honor earlier, right? जो पहले लोन दिया था, I was not able to honor that. So HDFC Bank gave me loan via an AIF so that I can honor my previous obligation, so that वो NPA ना बन जाए. So can I say that this is a case of evergreening? अगर ऐसा हो रहा है, that means this is a case of evergreening, and RBI don't want this and evergreening to happen, right? So this is all the directions are being done to prevent the possible evergreening, ताकि अलग अलग लोन लेके आप पुराना लोन चुका रहे हो. It doesn't make any sense, right? It doesn't make any sense. So all the limits are given here. All the limits are given here. However, all the limits are specific to loan, or I can say it as debt, right? These are loan based limit or debt based limit. These are not equity share based limit. So we can see here as the investment in the debtor of the RE, excluding the equity shares, compulsory convertible preference shares, compulsory convertible debentures. Sir, what do you mean by compulsory convertible preference shares, compulsory convertible debentures? Let's have a discussion around that as well. So look, this circular is applicable only on debt securities, right? Debt securities. If the AIF is investing via equity instead of debt, then there is no problem at all. Then there is no problem at all. If the regulated entity has invested via equity, not debt, then there is no problem at all, right? So three things are not covered here: equity, next is preference, which is compulsory convertible. So you all know that what preference share capital is all about, right? Now this preference is compulsory convertible into equity. Now it's as good as equity only for me, right? If it's compulsory convertible into equity some point of time at some day, then definitely I'll treat it at par as equity only for this particular transaction. So no restrictions on these kind of things. Then debentures that are again compulsory convertible into equity. So on these three things, this particular circular won't be applicable, right? You are free to invest in equity share capital, preference share capital, which is compulsory convertible, debentures, which are compulsory convertible of Prateek Limited, no problem at all, right? No problem at all. However, loan की बात मत करना, debt की बात मत करना, otherwise limits are applicable here, and that's what written in this particular draft circular. It's very, very important for your examination. I have given you the complete meaning of evergreening of loan, right? I have already explained you these terminologies, like what are convertible preference shares, what are compulsory convertible debt debenture instruments, right? And I have given you these limits as well. So please do remember this particular circular, very, very important. AIF को SEBI भी regulate करता है, right? SEBI regulate करता है, and it is related to both regulated entities and AIF. So that's why this particular circular is very, very important, because it's a regulation by both SEBI as well as RBI. Great. So if you guys have any query, definitely do let me know in the comment section. If you like my content, do hit the like button and do subscribe to my channel. Thank you so much for watching this video. कोई भी doubt हो, definitely you can ask me in the comment section. Thank you so much. See you in the next video. Bye bye. Take care.